Hi, I'm Milton Rendell and welcome to Real News Friday. Look, the market continues to sort of plod along and it seems to be fairly consistent around the sort of 900 sales per week, and that's continued in the last week according to the Real Estate Institute of West Australia. The interesting one, I suppose, in terms of where we are with median prices of houses at the moment for the average, the median, should say average because it's a completely different thing, is 775,000. Now we compare that to 12 months ago. The figure was 660, so 660,000 12 months ago, so May last year. And then previous to that was 55,000. So you've seen the quite large leaps and growths during that period. Now on the rental side, it's an interesting one. Sort of been plateauing a little bit in the last sort of 6 to 12 months in different ways. So the median price at the moment is 680 per week. Now 12 months ago it was 650, so you can see there's not as large a leap in the last 12 months. But prior to that was 560. So compared to 2 years ago, quite a large leap, but again, not as aggressive as probably what we've seen with the sales. Now, people continually ask me what's happening in this market, what are the catalysts to the whole situation. There's a lot of things happening outside that we can't control. Main indicators for us will be what happens with unemployment. If that changes, we've still got the same government, so the basic conditions in the background. There is some large talk about adjustments to superannuation laws, particularly affecting those over 3 million. That may flow back into the real estate section, and if that does, is that a positive? I don't know that yet. And I don't think any of us do, but if investors do return, that will probably then slow it down for owner-occupiers. But at the moment, we've still got a large number of investors who are unloading. So why they're unloading? Because they're probably around my age. So they've had their properties 20, 25 years. They've got a good equity hunk now. They're thinking about retirement and they're still unloading, and that's continuing. So we'll probably still see that. So that's causing part of the problem with rentals, because there's a shortage amount of rentals. The people who are buying are owner occupiers. So if you do the mathematics on that, if you've got a lot of rentals being sold and only a percentage of that, a small percentage of that is going back to investors, we've obviously still maintained that shortage of rentals. But having said all that, it is taking a little bit longer to lease and the rents seem to be flattening slightly. So I think that'll be probably the trend for the next 3 to 6 months. Outside of that, I can't predict much further than that. Stock levels are still relatively low. We're still under 5,000. People keep saying there's a lot of stuff being finished in construction. Seeing part of that, but again, we're still short of trade. So some of the things won't change, but probably the main thing I would say to most people, you get to an affordability level. And when we talk about affordability level, means that's as much as people can afford to pay to live in an area. So I think we're seeing some of that, and that probably will continue, and that may slow the market in the second half of the year. May be wrong, but that's my thoughts for today. All the best. Look forward to speaking to you again next week.